CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. So what 130 points is what we have on the Nifty, and we're at 21,570. So I think there's a bit of a give back from the day's highest point, but nothing to really complain. The high has been made at 21,603. Nilesh Shah is joining us in our studios here. He's Managing Director, CEO at Envision Capital. Nilesh, great to have you with us here. Thank you very much for your time. Season's greetings. How are things looking, Nilesh? I mean, looking good. I can't complain, right?
Well, thank you for having me here, and season's greetings to you all and the entire team and all the viewers. Yeah, absolutely, Prashant. I mean, this is really great times. I mean, these are wonderful times, great times. What a year it has been. Totally contrary to the general expectations. And I think it's great to see the market end the year on such a high note and on a record high. So yeah, I mean, absolutely, great times.
It's also the time to make forecasts for next year. I know you're not in that business anymore. It's been ages, right?
Yeah. So, I mean, I left that long back.
So, but since you're here, I mean, tell us, I mean, not forecast per se in terms of what Nifty will be or that will be, but generally, how do you think about the next year after this fantastic run that we've had?
I do expect the good run to continue. I think at least purely from a macro point of view, 24 is expected to be a much better year. I think the growth should be pretty much intact in terms of our economic growth rate. I think inflation, probably the worst is behind us. It's probably peaked out. So I expect overall to be good. I expect stronger liquidity from global investors.
Right.
I see a much higher participation from global investors for two reasons. One is, of course, the India factor itself. And the second is that China has been a huge underperformer, and I see a lot of allocations move away from China into India, as India is exhibiting now some of those growth dynamics, which probably China demonstrated 10, 20 years back. So I see these kind of trends to kind of come to fore in 24, and that makes me continue to be very positive.
You know, of all the things that you said, if one was to make a Venn diagram of the India theme doing well, stocks which a lot of stocks have done well, but a lot of stocks haven't done well, then the FII participation increasing, all the macro theme, the common shaded area between all these three Venn diagrams would be HDFC Bank.
Absolutely.
Something that you like.
Absolutely. I mean, there's that. I mean, of course, the large cap private banks is going to be a standout sector.
Right.
But I think of that, HDFC Bank clearly continues to be the big favorite. And purely because it's just, yesterday I just saw, I mean, I was just doing a check, and HDFC Bank on trailing earnings, I know that we look at price to book for banks and P multiples is the wrong way, but the way I look at it is that it's a growth stock.
Right.
And if I look at on P multiples, it yesterday was at 18.8 times trailing earnings, which is a discount to the Nifty. Which I have never seen in my investing career, that HDFC Bank trades at a discount to the Nifty valuations on a trailing earnings basis. And that to me itself is a standout indicator as to why HDFC Bank can end up being a good investment opportunity.
That's number one. What is number two in that?
I still think, again, it will be a private sector bank. I think Axis Bank.
Okay.
I think Axis Bank has had to do a lot of heavy lifting in the last so many years. I probably think that the heavy lifting is now behind them. And the outcome of all that heavy lifting and all the growth measures that they have undertaken over so many years, I think are now beginning to yield results. And so I probably think Axis Bank could be a great investment opportunity.
And with NBFCs, I think you liked Home First?
Yes. So Home First is, again, I think it's an outstanding compounding story. I probably think it's one of the best compounding machines which are there, of a business growing at about 30% and able to manage NIMs and asset quality relatively well. And the direct outcome of that is a continuous expansion of ROE. So I think to that extent, I think it's fantastic. Obviously, of course, the intermittent overhang of the private equity funds coming in and selling and all that, that overhang remains. But I just feel that as long as the business continues to do well, there's an appetite for that overhang.
Just to complete that circle on financial services, I mean, HDFC Axis, there is Home First in the housing finance NBFC space. Anything else? There is all these capital market plays and Wealth management as a business. I mean, anything there which you...
So for us, the best proxy to that has been Angel One.
Right.
We've been investors in Angel One ever since its IPO, post the IPO, probably in the first few months it went public. That's the time we kind of spotted it and invested in it. And I've continued to be an investor through and through 21, 22 and 23 as well. So we've liked that, and it's one of our leading positions as well. And the business, I think, has performed remarkably well despite all the competition and the possibilities of disruption. But despite that, I think that the business has done really well. We continue to own PB Fintech. That's essentially the insurance distribution business, as well as distribution of personal credit and credit cards. So that, I think, business continues to, again, shape up relatively well. So these are some of the other things that we own in the overall financial services, banking, and the BFSI space.
Where are you placed on this entire PSU theme? Because a lot of people have said this was the year of PSUs, and the next couple of years will also be the year of PSUs. Some are playing it via the defense theme, some are playing it via the railway theme, some are playing it via some of the PSU financial theme. Where are you placed on this, and what are your thoughts here?
Yeah, so I think my thoughts are that railways and defense will continue to essentially be the best places.
Despite the run-up.
Despite the run-up, because the growth is going to be phenomenal. I think, Mangalam, one of the things that which one has learned over the years is that as long as the growth is intact, the heady growth is intact, clearly I think the valuations then have no bar. And we could keep arguing whether 20p is high or 40p is high, but then valuations don't end up being any bar. The challenge comes up is when the order book accretion peaks out, but that still seems to be yet quite far away. So I still think railways defense will be the big space.
What names there, Nilesh?
So we used to earlier like names like Bharat Dynamics, Garden Reach, and we own them, and of course we've now totally exited them as well, because we're finding relatively better opportunities, purely from a valuation kind of point of view. No, I just think we've increased our weights on the private banks. So we were there in them, but we've off late increased our weights in private banks because we just think now that the valuation trade-off is quite.
But for railways, you find them a little punchy.
I think now, yes. I surely think that valuations have got heady. And it's now going to be a question of timing your exit rather than essentially kind of thinking about...
Not timing your entry, timing your exit.
Timing your exit. Now, I don't know whether that's like 1 week away, 1 month away, 1 quarter away, or a year away.
Right. But you don't want to buy closer to where you think,
I don't think they're now buys. I mean, post the kind of run-up. I mean, I was just seeing some of the defense, PSU defense names. They've gone up by 50% in the last... month and a half.
So same for railways and defense?
I think so. I clearly think so.
This is the consumer space, the entire consumer space. What's the top idea?
It's looking attractive. The consumer space, especially the tier 2 consumer space, is looking extremely attractive. So, of course, so far we've backed names like Radico Khaitan, Mrs. Bector. These are the names that we have backed. But I think probably now some of the favorites could be names like Pratap Snacks, for example. The packaged foods business, I think, is continuing to witness good traction in terms of demand, but most importantly, I think margins are set for expansion. Right. Majority of these businesses were challenged because of high crude oil prices, higher freight costs, higher packaging costs, and a bit of sluggish demand as well, in which it was difficult to pass on some of these spike in input costs. I probably think the worst is behind for them, and we are entering a period where margins could potentially expand. And when that happens, the earnings could pretty much grow in double digits, and therefore these are poised for strong performance.
And in light of that, it's usually the second-tier companies that do a lot better than the larger-tier companies, because the larger-tier companies then start facing competition from these second guys. And we've seen that, spoke about Bector's doing well. Jyoti Labs, for instance, has done extremely well this year as well. We've seen some names like Imami, etc. as well. Final question, just to, finish our entire range of discussions that we've had. You speak about growth, you speak about valuations. Both of them together are available in the new age companies. You have spoken about PB Fintech. What are your thoughts on names like Zomato, Delivery, Nykaa, Mamaearth, all of them?
So I think all of these are great businesses. Okay, I mean, each one of them, and they still have the potential to grow quite significantly. And I wouldn't be surprised if, say, 10 years later from now, these businesses could potentially be maybe any times 4 to 6x or maybe even 4 to 8x of where they are currently as businesses.
Yeah.
The challenge again is going to be that I think one is valuation and the kind of momentum that they have displayed. So I probably would think is that sometime in 2024, wait for a weak spot for any of these businesses. Wait for a weak spot, wait for a weak quarter, where the market probably swings to the other extreme, saying is that these are businesses which are probably damned or doomed. and that itself would be a great opportunity. So I would probably say that look for an opportunity in times of adversity for these kind of businesses.
Any IPOs recently which have listed at 50-60% premium and you said, well, I wanted to buy that, but obviously not here. And then as you use the word damned or doomed, and I'm going to do it when one of those things happen at some point.
Yeah. Plenty of them. I think plenty of them. I think, Prashant, the good thing about these IPOs, I think, is that these are good businesses. Unlike I've seen many of these IPO phases in the last 10, 20, 30 years of my investing career. And I've seen several times where the quality of the IPOs was not good earlier. What I'm seeing a big difference this time, I think, these are good companies. A lot of them have done remarkably well, and they are well-sized companies. These are not like some of those micro caps and all of that kind of stuff. So I think these are good companies, just that the valuations are just too frothy. At the first level,
anything you like?
So I think some of the consumer names, I think recently we've seen IPOs of companies like, say, Cello or Flair, for example. These are good consumer franchises with very deep distribution reach and strong brands. And they're not segments where there's lots of competition coming in. And they could probably end up being good businesses and good investments as well. I just feel that at current valuations, maybe in some of them or in most of them, valuations surely are frothy.
We're penciling in too much. Thanks very much, Nilesh. It's a great chat as always. Appreciate your time. And if we don't see you before the end of the year, all the best to you, to your family,
Thank
to
you.
your team.
Thank you so much.
Thank you.
Thanks.
All right, we'll take a quick commercial break here. I think the market just to 20,546. So from the highs, we're off about 60 points or so. We'll come back, and I think we have a consumer discussion lined up in just a bit from now. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.